It's noon here in Ventnor City, New Jersey, and our nation's capital, Washington, D.C., and this is CarEdge Live for the last day of September 30th, with your hosts, me, Ray, here in Ventnor City, New Jersey, and, well, Zach, ensconced comfortably in his apartment in Washington, D.C. How are you today, handsome?
I am doing fantastic. Happy end of September, everyone. Thanks so much for tuning in. As you know by now, if you've watched CarEdge Live for a while, we've got an end of month promotion running right now back at CarEdge.com. Folks, if you're going to be in the market to buy a car in the fourth quarter of this year, take advantage of our 20% off promotion, 20% off CarEdge Insights, which are the tools we use to secure the best deal on behalf of our customers. Right there, all the data you need to level the playing field, or 20% off our car buying services. And again, if you're going to buy a car in Q4, take advantage of this discount right now. Our concierge service as well as negotiation expert. Go for it, Dad.
No, I was just going to say, it sounds good. It's almost as if there's a loophole in our discount program where, well, you can sign up today, and as long as you take delivery by the end of December, you're in good shape, folks.
Stop. Speaking of loopholes, this is where we're going to kick things off. Nothing is as it seems to be ever. And then, emphasis on the auto industry. We've got this loophole news from Ford and General Motors that we're going to talk about. And then, Dad, we've got some really interesting data from Cox Automotive. They do their weekly auto market report, and holy cow, does it seem like the tide is changing in the auto industry. But first, Dad, let's talk about this. GM Ford workaround EV tax credit expiration with Q4 lease programs. Now, to be clear, folks, we don't always talk about EVs on this channel, but today is the last day to take advantage of a $7,500 federal tax credit, a tax incentive to purchase or lease an electric vehicle. And this breaking news from GM and Ford is absolutely absurd. What is going on here, Dad? What is this loophole?
Well, apparently, ladies and gentlemen, you can, if you have placed some type of deposit on a vehicle that you intend to close on after September 30th, but you've placed the deposit on the vehicle by September 30th, well, then you would still get the $7,500 tax credit if you qualify for it. If it's a lease, it automatically would get passed through. And so this was, I believe this was designed, the interpretation from the IRS was designed to encourage customers to at least sign a formal contract for a vehicle that might not be able to be delivered by today, but sometime in the not too distant future.
Yeah, let me read directly from the IRS guidance. It's right here. Quote, if a taxpayer acquires a vehicle by having a written binding contract in place and a payment made on or before September 30th, 2025, then the taxpayer will be entitled to claim the credit when they place the vehicle in service, namely when they take possession of the vehicle, even if the vehicle is placed in service after September 30th, 2025. So exactly, Dad, to your point, an incoming new electric vehicle, I as a consumer could sign a contract and put the first payment down on that vehicle, even though I might take delivery of it a couple weeks later, a couple months later in the following year. And so what's happening here is that General Motors and Ford are essentially selling these vehicles to their leasing company before September 30th, before the end of day today, putting a first payment on them, getting the $7,500 tax credit, and then leasing them to people in the future? Total loophole to try and secure the $7,500 tax credit.
Is it a loophole or is it fraud? And I only ask that question because there is a difference between a customer entering into a contract, a legal and binding contract, by signing it and putting money down on it, and the lease entity being the placeholder and putting the deposit down when they have no idea who the ultimate customer or lessee will be. So that to me almost borderlines on fraud. Now, in my opinion, and let me say this: we are a consumer advocacy organization. However, that, in my opinion, doesn't include finding loopholes. As a taxpayer, it is almost as if I would like to sue and say, I don't want to spend any more of my money for these tax credit incentives that expire on September 30th if a multi-million billion-dollar corporation has found this loop. And I have no idea. Nobody can sit here today and tell us how many of these vehicles will be impacted and how much money this is going to cost the federal government in what I would consider to be not a good faith transaction, simply a placeholder transaction. So I want people to be able to get a good deal. I want people to be able to save money, but I want it to be legitimate. I want it to be the way it was intended. Now, I understand, having spent 40 some years in retail automotive, that if every detail isn't spelled out, well, then major corporations or pain in the ass salespeople will go, this wasn't on the list. This is a little bit of a workaround. Sometimes can't we just go by what the intent of the regulation was as opposed to looking for the loophole in the regulation? But I digress. I apologize.
Just to make sure everyone's crystal clear on what's happening here. And I pulled you up solo for when you're talking about wanting to sue multi-billion-dollar corporations. That they could put us under their thumb. And so that's in his opinion and his opinion only.
Oh, yes.
Let me read this out just explicitly so everyone understands. The automakers, General Motors and Ford, are using their financing arms to offer the incentive beyond September 30th by making down payments on the vehicles before finding customers to lease them. The programs were confirmed in documents obtained by Automotive News and by people with knowledge of their plans. GM dealers need to sign up by September 30th to participate, while Ford gave dealers a September 26th deadline. GM confirmed its program in a statement saying the automaker, quote, worked with our GM dealers on an extended offer for customers to benefit from the tax credit for leases on select inventory of our broad portfolio of Cadillac, Chevy, and GMC EVs. So again, they're selling them to the leasing company, putting an initial down payment, and then ultimately customers in October, November, and December will be leasing vehicles that had already been sold to the leasing company. Now, it is kind of interesting, Dad, because at the end of the day, if you lease a car right now, the car dealership owns it, or more likely the finance company owns it, the bank where they get their floor plan from.
No, the leasing company, the leasing company.
What I'm saying is before they sell it to the leasing company, the dealership owns it. More 9 times out of 10, the dealership actually doesn't own it. The dealership has financing on it from their bank. Great. Then the leasing company buys it, and then the customer leases it. Essentially what we're doing here.
But wait, let's stop there for 1 second. The leasing company doesn't buy it until,
of course,
there is a customer in place to lease it.
Of course. No. I think that's an important call out, and to me, crystal clear. And I think, again, what makes this a loophole is essentially what these corporations are doing. What GM and Ford are doing is they are selling cars to leasing companies, which are essentially just like holding companies or finance companies. They're selling them to those companies without retail customers. And they're doing it today because then they can get that $7,500 benefit to then try and lease it in November, in October, November, and December.
But here's the problem.
Let me hear the problem.
As I see it, okay? The paragraph you read before was a legal and binding contract. A lease doesn't have a legal and binding contract until someone has agreed to a lease payment based on a selling price. So How
Well, it
is
makes
it?
you wonder, what's the definition of a taxpayer? If a taxpayer acquires a vehicle by having a written binding contract, because Dad, I disagree with you. If the leasing company is a taxpayer and the leasing company has a written and binding contract with the Ford dealer to buy the car, they're probably good to go. And you got to imagine, Dad, GM and Ford spent tons of money with their in-house lawyers and outside counsel to try and make sure that this thing's legit. It's just a pretty crazy loophole to try and extend the benefit of these tax credits beyond their intended date, which is obviously the end of day today, which I think that I hear your point on, you don't like loopholes, but this actually is a benefit to GM and Ford lessee customers who aren't in the market to buy an EV today, but may become a customer to lease a Ford or GM electric vehicle before the end of the year, because now they at least can continue to take advantage of this $7,500 discount.
Yeah. Okay.
Come on, no, put yourself in the shoes. Put yourself in the shoes of John Doe or Jane Doe, who have never watched CarEdge live, who have no clue that the federal tax incentives end today. And they go to buy a car at the end of the year because they know that they've heard from a buddy or from a friend that to get the best deal on a new car, you go at the end of the year. It's a tremendous benefit to John and Jane Doe when they show up at that Ford dealership and they did this gimmick, they did this loophole, and now it keeps $7,500 from them having to be spent on that Ford Mustang Mach-E. There is a benefit here. It's a little gross how we got there, but there's a benefit.
I am not arguing that there isn't a
benefit. Lou's right if they pass that discount forward.
Yeah, I am just saying that.
Take your time. Take your time. Deep breath. I'll give you the full screen.
Well, a lease is based on many things for the customer. What the agreed upon selling price is, what the depreciation is, what the money factor is, what the payment is. The leasing company buying, or not even buying, just saying we agree to buy, or putting down a nominal deposit to say, okay, we've agreed that we will buy this and we will deliver it in the future. To whom? Okay, I believe the idea behind this was to have a customer. Now, yes, this will be great for customers in the future who did not take advantage of the expiring federal tax credit that expires today. But when is the expiration date of something not really the expiration date of something? Ooh, the federal tax credit for leasing. Oh, yeah, because we'll just pretend we're selling it to our leasing company. Leases require a customer, and the leasing company only buys the vehicle once the customer is in place, and they buy it on behalf of that customer.
Because it's actually a risk.
So wait a second.
It's a risk.
So how can the lease company buy it when there is no customer in place?
I like Space's comment here, Dad. A loophole for another loophole. And it is, to be clear, it's actually a risk for the leasing company, because if the dealership never finds a retail customer for this, the leasing company is the one who bought the vehicle. To be clear, probably someone else's financing. It's a racket. To be very clear, it's a racket, Dad.
Won't that be a really interesting thing when the leasing companies have placed these nominal deposits on vehicles, taking them off the market so that someone else couldn't buy it if they wanted to?
Yeah.
Now, wait a second. What if they never find somebody to buy that vehicle? What did they put down? $75, $50? I mean, is it so?
And the title changes.
So wait a second.
The title changes.
Well, is there?
The leasing, I mean, I don't know. Actually,
I don't know.
Are they used cars now? If you sell, it's very
no, because my goodness, I will assure you that you're not passing title onto the leasing company when there isn't anybody to lease the vehicle. That doesn't happen until the lease gets signed and there's a customer on the other end of it that's responsible for that payment. So let's just say that they buy 1,000 cars, and let's just say they only end up leasing 900 of them. what happens to the other 100? Do they just revert back to new car inventory as if nobody ever had a deposit on it? This is just pure, unadulterated BS, okay, that these companies have come up with to, in essence, rip off the federal government, in my humble opinion.
It is a fascinating development in all of this. And kudos to Automotive News for getting the documentation to be able to share it and corroborate it and validate it. It's absolutely nuts. Does it potentially have a benefit for uninformed consumers? Yes, let's be very clear, it does. Is it potentially, seemingly, I'm not a lawyer, my dad's not a lawyer, these do not represent the values of CarEdge fraud? I don't know. Maybe we'll ask our general counsel to take a look at it, because it is fascinating to say the least. And I love Space's comment there, Dad. At a minimum, it's a loophole and another loophole and another loophole. It's all some convoluted BS. And it's really in service of just trying to save them some money, really.
Save who some money?
Ford and General Motors, because if they lose that $7,500, they know they can't sell those cars. They can't lease those cars.
Well,
They're trying to make sure
the lease payments won't be quite as good.
How much does the payment go up on a lease every $1,000, Dad?
$30 for every 1,000. So that's 200 and that's what, 280
bucks
and $30 or something
80,
like that.
280. Dad, I mean, yeah, do that math for a second, because
3 times 7 is 210.
Yeah, so
and
240.
So it would be $225 that the payment would be impacted
if the federal government wasn't writing that check for them.
Exactly. So if that doesn't sound like fraud, damn it, I don't know what does.
Dad, I got a question here from Tone Talks. Have you seen this type of pre-purchase by a lease company before?
Oh my God. Listen, manufacturers, BMW in particular, oftentimes encourages their dealers at the end of a month to move vehicles into service loaner fleet. But the difference is they get titled. They've actually sold them to.
Well, Dad, to be clear, BMW's.
These aren't getting titled.
Dad,
there is
BMW's
no
been
motor vehicle work that's going to be done on these potential lease vehicles until the ultimate customer is found.
Dad, hang tight though, because BMW has been caught. SEC charges BMW for disclosing inaccurate and misleading retail sales information to bond investors. So I know you're saying there's a title and all that, but actually BMW's gotten caught up in this stuff. This was back in September of 2020.
No, absolutely. This type of chicanery has been going on for years. Fiat and Alfa Romeo encouraged their dealers for years to report things as sold that weren't sold.
Let me read this.
The difference is, wait a second. The difference is they're not collecting $7,500 from the federal government every time they do it. And that means they're not collecting $7,500 from you and me and every other taxpayer out there every time they do it. That's a huge difference.
This was, though, what BMW did back in 2015 to 2019, inflated their reported retail sales in the U.S., which helped BMW close the gap between its actual retail sales volume and internal targets, and publicly maintain leading retail sales position relative to other premium automotive companies, Mercedes-Benz. The order finds that BMW of North America, LLC, maintained a reserve of unreported retail vehicle sales referred to internally as the, quote, bank, that it used to meet internal monthly sales targets without regard to when the underlying sales occurred. The order also finds that BMW paid dealers to inaccurately designate vehicles as demonstrators or loaners so that BMW would count them as having been sold to customers when they had not been. Additionally, the order finds that BMW improperly adjusted its retail sales reporting calendar in 2025 and 2027 to meet internal sales targets or bank excess retail sales for future use. As a result, according to the order, the information that BMW provided to its investors in their bond offering and to credit rating agencies contained material misstatements and omissions regarding their U.S. retail vehicle sales. So obviously, this is different than what we're seeing here with Ford and GM, but kind of in the same sphere of like gamesmanship.
But
loophole.
No, one doesn't
One doesn't cost the federal government $7,500 a pop.
One is not attaining a tax advantage by doing this, and one is. And just knowing how leasing works, just knowing that there needs to be an ultimate customer. The leasing company is not the ultimate customer.
No.
They're the ones that will pay for the vehicle, and then the ultimate customer is going to be making monthly payments to the leasing company for having fronted the money for them. Okay, but that doesn't, you have to have the customer. And so right now they're just saying, well, we'll find a customer eventually, and when we do, because of what we did on September 30th, we'll still be able to get that $7,500 federal tax credit passed through.
So, yeah.
That to me is, I don't know why it's so hard to say something's wrong when something's wrong. Okay,
sure,
and this just happens to be one of those situations where it's wrong. Okay, and I don't know why we can't just say this is such BS, and we as the American taxpayer shouldn't have to be paying for it.
For sure. I think you're onto something, Dad. And I think, just to be clear, Mark, how does this affect the consumer? My dad just said it. If you did not lease an electric vehicle before September 30th, and now it's October 30th, November 30th, December 30th, that Ford dealer, that GM dealer, they have the option to pass along to you for these vehicles that they previously sold to their leasing company. They have the option to continue to pass along a $7,500 tax incentive. We'll see, Dad. Well, I'd be very curious if this stands. Like, if we make some noise about this over the next couple of weeks, if this, I don't know, if something changes here, I would not be surprised, because it is definitely on the fringes of what is ethical, allowed, etc. Really, though, I want to say fascinating stuff, because we've seen for decades, you've experienced this in your career, RDR and retail delivery reporting vehicles that aren't actually sold. Like, I don't want to incriminate you in any way, but like, you did that in your career, didn't you?
What? No.
You didn't.
Have I seen?
Have you seen it?
Yes. Okay.
That's pretty common in the auto industry. This piece where you're essentially doing the same thing, but then getting a $7,500 tax benefit from taxpayers. That's where it's a little bit different. Not a little bit different, a lot different.
It's a lot different.
Yeah.
Okay. And I get it. You
never fake RDR to car, Dad?
Huh?
You never fake RDR?
Yeah, absolutely. Yeah, no, we did. Yeah,
sure.
absolutely.
Yeah, it's pretty commonplace, I think. Like,
well,
you put a car in the service
in the
loaner,
70s and 80s. Yeah.
Yeah.
But that was like the wild, wild west of auto sales back then. But when you read that article, you begin to understand why lawyers are paid what they are paid, because they can look at words and find completely different meanings for them than what the rest of us thought they meant.
Yeah,
they deal in semantics, okay, where you can make something sound like you're saying one thing, but you're really saying something else because you left a word out somewhere. And so I get it. Is this more than likely legal? I don't know. Will the government spend any money to put a halt to it? Absolutely not. But is it the difference between the right thing to do and the wrong thing to do? Yes. In my opinion, there's the difference between the right thing to do and the wrong thing to do. And the wrong thing to do, in my opinion, is to stick the American taxpayers with extra expense because you're trying to figure out a way to move product that you couldn't move without the government's assistance.
Really well said, Dad. Let's switch gears before we do. For those of you that have joined us now, CarEdge.com, my dad and I and our team of about 50 behind the scenes work every single day to help thousands of people buy new and used cars. We also help with researching vehicles, extended warranties, tracking your vehicle values, insurance, things like that as well. But the thing I want to call out right here, right now, is we
Yes.
have a promotion ending at the end of this month. So just
Does
the
it end?
same as
No, I want to know. Does it really end? Does it really end? Or is there
20%.
some loophole?
20% off CarEdge Insights, which are the tools we use to get the best deal on a car for our community, and 20% off our car buying services. If you're going to purchase a vehicle you think here in this fourth quarter, which is the best time of year to buy a new car, please take advantage of this promotion. Get your hands on CarEdge Concierge or Negotiation Expert. Dad, the other piece of information I wanted to pull up today is
Yes.
Cox Automotive does these weekly auto market reports. And I just want to flip through a few of these slides because it just starts to corroborate the storyline that you and I have been talking about for a while here. So consumer sentiment down so far in September. We talked about that a little bit yesterday. So that's broader consumer sentiment being down.
Yes.
Retail sales have been declining in September. New vehicle sales hold higher year over year, but have fallen for the last 2 weeks as used car sales have declined more sharply. So again, a little bit of negativity, some pessimism here. We've got low APR financing lower in September. In September, low interest rate offerings have declined, even as the Fed has started to cut their rate policy. Auto loan rates are actually up in September. The average used car APR is 14.2% in September, and the average new car rate is 9.45%. New and used supply has actually increased in recent weeks. New supply remains below last year's levels, while used is now running above last year. Used prices have inverted as wholesale markets weaken. The average model year 2022 price for retail was steady last week, while wholesale prices actually declined 0.7%. And then the leading indicators here, Dad, dealer leads are actually up year over year in September on AutoTrader and KBB, but leads are down for the month compared to August on both sites. Unique leads per dealer are down year over year in September for new vehicles, but are up for used.
Yeah.
Unique credit applications are up 9% year over year. So that's a little bit of good news. So it's like you read through most of these bullet points, it's bad. Growing inventories, weakening demand. Like it seems like the auto industry, even on the retail side, a little bit of a wake-up call going on right now.
Well, it seems like, well, I don't know, maybe we're actually being confronted with reality. Okay. And the reality is, and has been, and will continue to be for the foreseeable future, that most items today, especially automobiles and auto loan rates, are priced out of the majority of the population's reach. It is just, it's not that difficult to see. Now, perhaps it's difficult to do something about it, apparently, unless they can figure out another loophole. But it's plain as day that you can't continue to have prices go up, car payments go up, insurance payments go up, maintenance costs go up, interest rates go up, loan terms go up, and expect this to not be a recipe for economic disaster at some point in the not too distant future.
Yeah.
You know, people can only be leveraged financially or credit wise so much before the damn house of cards collapses.
And Dad, I look at
that's why we have the loophole of bankruptcy in this country. For those of us, and I was one,
I was about
who
to say,
made that mistake, who got in way over his head when I had my Golf USA store. And I know, you know, so many of my vendors said, well, we want a personal guarantee if we're going to sell you a product. And I said, it's not a problem, because if this thing goes south, guess what? There'll be 2 bankruptcy filings that day, one for the business and one for me personally. And why did I do that? Because that's a government's way of encouraging people to take the risk and become job creators. and sometimes the risk pays off, and sometimes it doesn't. And so you are given that opportunity to wipe all that debt off the books because you took that risk to do something.
Yep.
So yeah, I've done it. It's it's one of the most demoralizing things you can ever go through.
For sure.
And I can tell you that from a personal perspective. It hurts your ego, it hurts everything.
Sure.
But this is where we're headed.
Well, that was the comment I wanted to make. That is, I look at every single week, Cox Automotive puts out those weekly market updates. It's great data. I greatly appreciate that they share that information publicly. The tune is a different tune, Dad. It's pessimistic. It's negative. And that's different because it had actually been leaning more positive over the past few months. But I think as we head into the fourth quarter here, it's actually quite negative from the industry perspective, which again, fourth quarter is the best time to be in the market to buy a new car. And I actually think we could see some opportunities on the used car side too. The fact that they saw used car sales have fallen off more of a cliff than new car sales, and inventory levels are actually higher year over year for used car sales, or for used cars. Like, there's a real sentiment shift going on right now, and some fundamentals are shifting as well. And I think, you and I will have to keep our eyes posted on next week's market update, but as well, like the latest data we get on average incentives as a percentage of average transaction price. Like, I could start to see here a little bit of like a buyer's market opportunity and some positivity for consumers, where for a long time it had been really a seller's market, lots of good momentum for the industry, not so much for consumers.
The problem is, even if it suddenly becomes a buyer's market,
the prices are still ridiculous.
And the people aren't in any position to take on considerably more debt in order to help save that market. That's the real issue. If you look more deeply at it, prices could go down, but people are so leveraged today for everything that it just, even if it turned into a buyer's market, there might not be enough buyers to sustain the market.
Pops, I want to thank two of our community members who just left reviews back on the CarEdge Google page. From Scott here: my daughter just purchased a new 2025 Toyota Corolla using CarEdge strategies. They got the out-the-door price stat. They negotiated their trade-in once the OTD was completed. And I just want to pull this up here. Congratulations to Scott and his daughter. Well done. Love seeing that. Thank you so much for sharing your experience back on our Google page. And then we've got another one here, Dad, from Anthony. This came in just 19 hours ago. We've got: I was hesitant to pay a relatively large amount for help in purchasing a 2026 Hyundai Santa Cruz, but I knew from past history that dealing with a car salesman is one of life's most uncomfortable and personal interactions. And no matter how many times I watch CarEdge videos, I would not fare well. So I signed up for the concierge service, and I'm very happy I did. My concierge, Jerry, helped me pinpoint the exact vehicle I wanted, found it for me, and negotiated a good out-the-door price. Thanks, Jerry. And Drew at CarEdge arranged for delivery of my truck, which arrived quickly. Thanks, Drew. I would definitely encourage others to use the concierge service. It's a good-looking truck here.
Yes.
Congratulations to our dear friend here, Dad Anthony. We appreciate everyone that shares their reviews, their positive and negative experiences. We're human beings. We work our butts off. Our team works their butt off to try and support everyone that comes into our door that we're able to help. And just wanted to highlight those two right there. Okay, Dad, let's call it a show.
Okay.
We'll be back tomorrow with more CarEdge Live. And we just got, while we were on here, Dad, we just got an offer to do an interview. Wait for it. I'll confirm. Stand by. CBS and Fox in West Virginia. So you know what? Thank you to everyone who we did ABC in San Diego yesterday.
Yes.
Tomorrow we'll be doing an interview with CBS and Fox in West Virginia. I mean, we are just everywhere at the moment, man. It's really cool. So thank you to everyone who shares CarEdge. It's so cool seeing me and my dad on the news everywhere. How cool.
That is cool. And then you have me working this coming Sunday. I'm doing a radio interview at 11 o'clock in the morning for what is it? AAA radio in, I believe, Massachusetts.
We're busy folks. But Dad, Brian's going to make sure you're well fed. Thank you, Brian. Really appreciate it.
Well, that'll pay for about a third of the sandwich. Yeah. Thank you, Brian. I'll get Zach to cough up the other $20.
Igor's right. Bloomberg interviewed Justin on our team. That was an incredible article. which has now been like reproduced in a bunch of other places. And it's, yeah, I mean, they just wrote an entire article on CarEdge data. So thank you, Justin, for your incredible efforts there. Okay, folks, we're back tomorrow with more CarEdge Live. Dad, enjoy the afternoon. I love you very much.
I love you too. I believe we have a meeting at 2.
We do. We have an all hands meeting at 2. Yes.
Well, you know what? I'll be there because, well, I'm all hands, ladies and gentlemen.
Appreciate it. Love you, Dad.
Love you too. See you soon.
Bye.